We welcome you, sir. I also like to welcome past CIRC Chairman Sri Abhay Chhajed. We welcome also, sir.
Thank you.
We hope that all the fraternity members and their families are safe and enjoy the healthy life. As you know, all we are facing a very critical situation due to COVID-19, and our branch activities are also impaired due to this. So our branch has taken an initiative to shift live seminar to virtual webinar. For that, we have already done so many webinars in the past month. Then following this scheme, we are going to organize webinar on revised code of ethics. For that, we have with us very eminent and learned speakers, Sri Manoj Panditji from Indore, and also Sri Abhay Chhajed from Bhopal. And I hope you will get benefit from their wisdom and enjoy this session. And this is all about from our side. And I hope you will find each second of this webinar entertaining and worth your time. At the end, once again to welcome to all of you. Stay home, stay healthy, and stay updated. Thank you. Too.
Friends, both our speakers, CA Manoj Fadnis sir, CA Abhay Chhajed ji, don't require our any acclamations. Distinguished global speaker. He has been present for 28 years, and he has been the part of our. He has been on the board of regulatory authority. He has been on the standing committee, almost all this committee of chartered accountant globally on the forum of SAFA, IFCA, and COPA. He has been nominated. He has been nominated director of SBI with a wide range of professional experience. He would be sharing his experience with us. Welcome, sir. And the other speaker, CA Abhay Chhajed ji, he branch. He has been a past chairman CIRC. He has held the chairmanship in the year 2011 and 12. He was nominated to the regional council of CIRC from 2013 to 2019. He also have been part of both non-standing and standing committees of Institute of Chartered Accountants of India. Pan-India, being a recognized speaker on various topics. I welcome Abhay sir today for this virtual seminar. Now I request CA Abhay Chhajed ji to brief the topic, followed by CA Manoj Fadnis sir, who will enlighten over the topic, that is Code of Ethics, which has been revised. Sir, welcome, sir.
Thank you very much, Pradeep. Highly respected past president of ICAI, CA Manoj Fadnis from Indore. And, you know, what better than can we have him as a speaker on Code of Ethics today or on Sunday, where, you know, he's made himself available for this Sunday out of his busy schedule. Sir, thank you so much for making your presence here today for the members, because I'm sure with your deliberation and your experience, the members present here would be highly benefited. Thank you very much, sir. Chairman of the Bhopal branch, Zubair, Secretary Pradeep, Samang, past Chairman Krishnan, and all distinguished members across Central region from Bhopal and other parts of the region. So welcome you all for this very important revised Code of Ethics 2019 seminar, or I would say a webinar. In fact, you know, we used to say seminars very often, but now it's been a webinar for last 60 days. So congratulations Bhopal branch for taking this initiative and holding this very important seminar or webinar on Code of Ethics. So which is, you know, part of the mandatory requirement which is to be fulfilled for CP structured learning. So 2 hours for this and 2 hours, of course, for standards and auditing. And thank you very much for inviting me. Of course, sharing, not as a speaker, of course, I would be more as a listener, but, when you listen to Fadnis ji and his experience, but definitely would like to share after he speaks, would like to share whatever, the FAQs or, whatever the questions members have, we and respected Fadnis ji can interact, and we'll try to resolve all the issues which the members have with respect to the code of ethics. Just to give you a little introduction about the change which has happened, there is a sea change from 2009 to 2019, the code of ethics. Now, of course, there are three volumes which have been introduced in 2019, and whatever the code of ethics which is there applicable is applicable up to 30th June 2020. So the new revised code would be effective 1st of July 2020. So, July is always an important and a crucial day for all of us. So now also the 1st July 2020, the amendments would be effective in volume 1, which would, based on the international ethics standard board of the accountants. The two would be based on, the various uh, governing provisions wherever the changes are, and volume 3 would talk about the disciplinary, the cases wherever there are changes. So we know, members have been uh, have doubts with respect to the code of ethics, but this revised code of ethics, there are changes, in terms of, I would say volume 1 majorly covers, the non-compliance in the laws and the regulations, which we call it, an abbreviation as no clear. So it's very important for each one of us to understand what no clear is. There are restrictions in providing additional services over and above as an auditor. There are restrictions in terms of fees which needs to be disclosed to those charged with governance. And, firm rotation, the partners rotation, all has been added in volume 1. And volume 2, of course, covers wherever there are changes with respect to the regulations, RCA Act or the Companies Act 2013. And all those changes like communication to the previous auditors, the advertisement, how it can be done, how it cannot be done, soliciting work, how applying through tenders. So all those changes have been taken effect in volume 2. And of course, 3 would cover the cases. So I'm sure, the uh, with the deliberation of furniture, we would be highly benefited and would get more clarity on what all changes, the substantive changes, I would say, which has been made in the revised code of ethics. So this was a little brief introduction, and I would request Manoj ji to kindly, address the members in the webinar. And of course, over to you, Pradeep. Thank you very much for giving me once again this opportunity. And I'm sure, this webinar would be highly benefited to the members with the deliberation of Fadnis ji. Thank you so much.
Thank you, Abhay sir. It was very briefing in a very nutshell. You have briefed out our members what all the changes, changes code of ethics are going to have. Now I would request CA Manoj Fadnis sir to provide his deliberations. So welcome, sir.
Thank you, Pradeep ji, Chairman of the branch, respected Chairman of the Bhopal branch, CA Zubair Ali Khan Sahab, other distinguished members of the Managing Committee, past Chairman of the Central India Regional Council, a very esteemed friend, CA Abhay Chhajed, distinguished past Chairman of Bhopal branch, several past Chairmen I could see on the screen, and above all my esteemed sisters and brothers in the profession. Very good morning to all of you. At the outset, I must thank Bhopal branch for this wonderful opportunity of interacting with all the friends through this mode of webinar. COVID-19 has taught us a lot of things on technology, and this is one very happy development which has taken place, staying at our respective places. So I am at Indore, and I'm also indoor, as is said. So, and all of us need to be safe at this crucial juncture of our times. So friends, with technology and with the new things which are there, it is a good occasion to discuss what changes are in the code of ethics. I'm thankful to Abhay Chhajed for giving that overview and the opening remarks about what have changed and the important aspects which he mentioned. In this session of next 1 hour or 25 minutes or so, we will dive deep into what are the major changes which have come and how they are going to affect us. So as Abhayji mentioned that the new code of ethics is going to be effective from 1st of July 2020. The institute has been making a lot of efforts to create awareness for these changes. The new code of ethics, it was originally supposed to have been made applicable from 1st of April 2020, but at that point of time there was not so much of awareness carried out, and therefore the institute had to defer it to 1st of July. Now, many of our friends might think that given the fact that last 60 days we had a COVID environment in which all of us were locked down, we find all the due dates under Income Tax Act and the Companies Act have been extended. So some may feel that why not this date of 1st of July should also be extended. So a very fair thought to begin with. My personal view on this is that our existing code of ethics itself is so robust and so strong. What ethical principles we have been following as a profession for last more than 70 years are so strong that just few changes which have taken place in respect of adopting the international code of ethics should not have any implications for us in not implementing it from 1st of July. And therefore, of course, it is for the council of our institute to decide the applicability date. But I'm sure at the end of the session, you would feel that not much changes are there in respect to most of us. There are some important matters which we must bear in mind, but it is doable, and the sooner we implement it, it is better, because we can then say that we can proudly as an institute say that we are following with the best international practices and we are at par with what the rest of the world is following. I must also compliment the efforts of our Central Council member, particularly CA Kemisha Soni, who is chairman of the Ethical Standards Board, who has been participating as a council member for last several years now in the international meetings of International Ethical Standards Board. I must also compliment the immediate past chairman of the Ethical Standards Board, who ensured that all these changes are brought in, particularly CA Sanjeev Chaudhary and then CA Ranjit Agrawal from Kolkata, who have made a substantial contribution in the designing and implementation of this code of ethics. And now it is for our local council member, as we call her, Kemisha ji, to see the implementation of this code of ethics. So friends, as we start these deliberations, you will find that while there are important changes, but those changes, and there are significant changes, but as I said earlier, as a profession, we should be able to implement these changes at the earliest. So I hope my screen is, my presentation is visible on the screen. Chairman sir, Zubair bhai, could you just confirm that, please?
Yes, sir.
Okay, thank you very much.
Yes, sir, we can see your presentation.
Okay, thank you. Thank you. So,
yes, sir, it is visible.
I would. I don't know, some lines are coming on the screen.
Yes, I think maybe someone's just used annotation. I believe that's why these lines have come.
It's not there on my presentation. Again, this is a technology with which we are grappling. I don't know, but I can see a lot of things as if it has been written and scratched.
Sir, maybe you can just go out and with the view screen and come back again. Maybe you can just try.
So if you permit, I'll stop sharing for a moment, and as you suggested, I'll
Yes.
try that again. But little a mystery for me as to see why this, because it is not there on the presentation which I have. So let's see. Is it clear now?
Sir, it's not on the screen. So you
Okay,
need to
okay.
Yeah,
share,
the screen
share
is
the
clear,
screen.
sir.
Okay, okay. Give me a moment, please. I'll do it.
Yes, sir. Clear.
Is it better?
Yeah.
Yes.
Yes, sir. Clear, sir.
Okay. So good. Those lines have suddenly disappeared. Uh, well, friends, as Abhayji mentioned, we had the institute first adopted the International Code of Ethics in 2009. Thereafter, there have been a lot of changes. The International Code of Ethics of 2009 was itself based on what was there in the 2005. And after that, there have been quite a number of changes in the International Code of Ethics as well as under the Indian law. So more particularly what Abhayji referred to in his opening remarks, like rotation of auditors. So as you would appreciate that the concept of rotation of auditors came in when the Companies Act 2013 was implemented. Prior to that, there was no concept of rotation of auditors except in case of public sector banks or in case of auditors of insurance companies, so on and so forth. So our 2009 Code of Ethics did not talk about rotation of auditors. So along with the international changes, there were changes in the Indian laws which necessitated looking at holistically the entire Code of Ethics, and that is how we have this present edition of Code of Ethics, which is now referred to as Code of Ethics of 2019, implemented with effect from 2020. So while this is based on the International Code of Ethics, as far as possible, there are no deviations from International Code of Ethics. The general practice in terms of implementing the code, which is followed worldwide, is that the countries and institutes can adopt more stringent ethical practices in different areas. I see one of our friends has raised hand, so uh, could you? Pradeep ji, can you see somebody is raising hands or somebody is trying to enter? So,
So there are few.
yeah. So,
So
can
we will
I?
take queries in the end. I
Yeah,
suppose if they are.
unless I'm not audible to you or you have some voice problems, uh, could I request our organizing team to see what issues our friends have?
Yeah, surely, sir.
So
I will take
I
it.
think maybe it is not clearly audible to you. Is that if you can write your questions in this chat box, maybe we can understand if there is a problem.
So the voice is audible. Maybe they might have just raised hand because they have just entered Taxpire. So we will
Okay,
take care if any queries members are requested to post in the chat box, and we
yeah,
will take all the queries at the end of the session.
fine. So as mentioned, if you have any queries, please write them in the and we'll take up the Q&A at the end. And by chance, if I'm not audible, Pradeep ji, Zubair ji, and Abhay ji, any of you can interrupt and
Yeah, yeah, yeah.
tell
No problem, sir.
if
You
it
can
is required.
continue.
So we'll proceed with this presentation. What I was mentioning is the International Code of Ethics are the best practices, but what we take it up as the minimum standards which are required. So the countries have can have more stringent requirements. So as we know, under Section 139 of the Companies Act, we have rotation of auditors. And now for last 5 years, that is a well accepted concept which has come into the practice. So in 2017, we had the first round of rotation of auditors, which is where auditors have been appointed for a period of 5 years. 2020, there could be another round of rotation. Now, globally, rotation of auditors is there in few of the countries, not in all the countries. So the International Code of Ethics is still talking about rotation of partners. Now we have, as against that, rotation of auditors. So in such circumstances, our code of ethics is more stringent than the International Code of Ethics, and it is not a mere adoption of the International Code of Ethics, but it is tailored to suit the legal requirements and the practices which we have in our country. Now, this code of ethics, as Abhayji also mentioned, has been put into 3 volumes. So, volume 1 deals with the International Code of Ethics. Volume 2 deals with what is our existing Chartered Accountants Act, Chartered Accountants Rules, Chartered Accountants Regulations, which are statutorily binding on us. And volume 3 contains some of the important disciplinary cases decided by the council of the institute or disciplinary committee from time to time. So as against 1 volume of code of ethics which is there, the new code of ethics is put into 3 volumes. So we will take up first volume 1, which is the International Code of Ethics, and this is what is becoming applicable from 1st of July 2020. So I would not take up all the changes which I've taken up, which are there in the new code of ethics, but deal with and discuss 5 important substantive changes, which are the top changes which we should be aware of and where our compliance is required. And you will find that these 5 changes are not very difficult for majority of us. Majority of our profession is today, as we call, small and medium practicing firms. Small and medium does not mean any smaller in qualitative terms, but it is only in number of partners which are there in a firm. So most of the firms are still proprietary firms or firms with maybe 2 or 3 partners. And in terms and medium practitioners, majority of us are also not auditing listed companies. So in that sense, I would say for a large section of our membership who are either proprietors or who are partners in smaller firms or who are not auditing public listed companies, you will not find substantive changes. But for others who are, say, large firms where there are 8 to 10 partners, or they are auditors for listed companies, they are auditors for banks and financial institutions, insurance companies. There, because public money is involved, the requirements for listed companies are more. And similarly, the auditors of listed companies are also required to comply with more stringent requirements. So the 5 changes, if we can look at, first is responding to non-compliance of laws and regulations, which Abhayji mentioned in his opening remarks, as is popularly referred to as no-clar. That is, where there is a non-compliance with the laws and regulations, what is the ethical requirement for a chartered accountant? And what is the ethical requirement also for a chartered accountant in public practice and also is in employment? So this is important for all our friends, all our professional colleagues who are working in listed companies. For them also this concept of no-clar is important and they should bear in mind. But those amongst us who are not auditors for listed companies, who are not auditors for, who are not working in listed companies, these provisions, as you will see, will not apply to them. Second is, there is some restriction on taxation services to audit clients. And as we will go through this part of the services, you will find that again, this does not affect majority of us. And for some of us, Of course, this would be very relevant to keep in mind. So there are some changes with respect to taxation services to the audit clients. Then we have prohibition on management responsibilities to the auditors, to the audit clients. So we have in the Companies Act, as all of us are well aware, Section 144 of the Companies Act, which prescribes that certain services which an auditor of a company cannot render to the audit client, and these are called as non-audit services. So there are some changes with respect to prohibition on management responsibilities. We'll discuss that. Then there is one matter which is subject matter of a lot of debate, which says that in case of audit of public interest entities, from a single client, you should not charge more than 15% of your total fees. And if your fees is exceeding 15%, then you are required to communicate with those charged with governance. Now, this issue has been a little controversial. Many members have given different views to the institute. I was told recently by our honorable council member CA Kemisha Soni that some changes are expected. Some changes have been proposed by Ethical Standards Board, and they may become, those changes may come in from 1st of July 2020. So we'll see this because this is important and we should deliberate on this. And finally, there is a new concept of independent standards. Now, independent standards are again nothing different from what we are doing, but it is presented separately in the Code of Ethics so that it makes it a separate compliance by itself. And all these issues are the best practices. We are already as a professional community following all these practices. Just to mention that we have this concept of internal auditor, not that we have this concept of a statutory auditor cannot be the internal auditor. Statutory auditor cannot write books of accounts. These are the ethical practices which are followed in our institute, I would say right from 1949. You will be surprised, friends, that in 2000, when the Enron issue had happened, and after that in 2002, the US Congress passed the Sarbanes-Oxley Act, the SOX as it is called. It brought in the that they cannot undertake internal audit services, they cannot undertake bookkeeping services for their audit clients. So in a way, in our country, we had been already following very high ethical principles. Some of these new independent standards which have come in are not far different from what we are following, but they have been presented in a separate set of standards, and therefore it comes in as one of the important change in the 2019 International Code of Ethics. Then there are some structural changes, how they are presented. That is more on the, for easy reading of the standards. The standards are very well presented. As you would have also seen in the standards on auditing, there is a, first is a standard portion, and then we have an application portion. So similar structuring has been done in the International Code of Ethics to distinguish what is the standard and what is an illustration or what is a application material. So there is a better understanding and presentation of the entire ethical standards in that regard. Now, these standards, the new the Code of Ethics, Part A, uses the term professional accountants. And let me explain why this word professional accountant is used globally. Because in India, we say we are chartered accountants. In some countries, they are called as certified public accountants. In US, as you know, CPAs as they are called. So the International Federation of Accountants, IFAC, has, for example, even from India, our Institute of Cost Accountants is also a member of IFAC. So they are called as cost accountants, or recently they are also being called as cost management accountants, or simply as CMAs, management accountants. So globally, the word which is used for describing all members of IFAC is professional accountants. And therefore, in context of the International Code of Ethics, what is word used is professional accountants, but it really means chartered accountants so far as this code is applicable to us. Now, this is how the existing code of ethics is structured. Part A is based on the IFAC, or the International Ethical Standards Board Code of Ethics, which was of 2005 edition. And Part B is based on the Indian law. So we have chapter 1 to 3 in Part A and chapter 4 to 7 under Part B. So we have the accounting and auditing standards, which are mandatory for all of us. Chartered Accountants Act 1949, since it is passed by the parliament of a country, it is legally binding statutory portions which we are obliged to comply with. Then under the Chartered Accountants Act, we have rules which are framed by the central council, by the central government, and below the rules in the hierarchy comes the regulations which are framed by the council of the institutes. Then there are certain self-regulatory measures which are the best practices which chartered accountants are required to comply with. So this is the structuring which is there today. Part A is the IFAC code, and Part B is our requirements under the Chartered Accountants Act, rules and regulations. So in line with that, what is now done is volume 1 is what is the International Code of Ethics. This International Code of Ethics has 4 parts. So part 1 is applicable to all professional accountants, that is applicable to all chartered accountants, whether they are holding certificate of practice, whether they are not holding certificate of practice. But if they say they are members of the Institute of Chartered Accountants of India, whether they are in public practice or they are just in industry, or they are entrepreneurs, or they are in civil services, so long as they are members of this institute, part 1 applies to all. Then part 2 is professional accountants in business. Now this is how the globally the word is used. Professional accountants in business in terms of Indian context means chartered accountants who are in service. So all those members who are in employment are required to comply with this part 2. Part 3 is what is applicable to chartered accountants in public practice. That is the majority of us who have joined this webinar. And then last is the International Independence Standards, Part 4A and 4B, which is how some independence standards have been separately set out in this part, which are applicable again, depending on the nature of services being performed, applicable to those people. So this is how volume 1 is structured, which is based on the International Code of Ethics. Then we have under the Chartered Accountants Act, because as I said, that is part of the law and compliance with that is mandatory for all of us. So in part 2 of second schedule, clause 1 of part 2 of second schedule is important. It says a member of the institute, whether in practice or not, shall be deemed to be guilty of professional misconduct if he contravenes any of the provisions of this act or the regulations made thereunder, or any guidelines issued by the council. So volume 1 is made mandatory to us by way of the provisions contained under this clause. The institute has issued it as a guidelines, and every guideline issued by the council of the institute is required to be complied to the extent it applies to a member of the institute, and if not so complied, it amounts to a professional misconduct in terms of clause 1 of part 2 of second schedule. So that is the enabling provisions in the act which empowers the council of the institute to issue guidelines, and once anything is issued as a guideline, it becomes obligatory for all of us to comply with those guidelines. So volume 1 is part of the guidelines which have been issued by the institute, which becomes effective as of now from 1st of July 2020, and we are obliged to comply with these guidelines. Now let us come to this most important aspect with respect to non-compliance with laws and regulations. Now, friends, you will be surprised that the International Ethical Standards Board comprises of people who are not accountants. So they are people from business, people from academicias, and of course there are some professional accountants who are members of that board. But the idea is that when the ethics are being set, we also have people who are non-members of the institute and of the respective institutes who are members of the International Federation of Accountants. And thereby, the objective is to set the highest ethical standards. So what is tried to be achieved here is that in case a company is not complying with the laws and regulations, so it is certainly a non-compliance with the law, and the respective laws will prescribe what penalties are there for the respective non-compliance. But the issue comes, what is the ethical requirement for a member? And in that background, this concept of non-compliance with laws and regulations has been introduced. To begin with, this is applicable in context of listed companies and in terms of audit of listed companies. So those amongst us who are not auditors of listed companies, as of now, this does not apply to us. But those amongst us who are auditing listed companies have to see what is the impact of non-compliance of laws and regulations. And non-compliance of laws and regulations, non-compliance of laws and regulations could invite penalties under those respective laws, could also invite issue of a professional misconduct in terms of the Chartered Accountants Act. So what is required is that in case of audit of listed entities, what are the laws which are required to be complied with? And uh, it also applies to those chartered accountants who are in employment of that company. So the reason is that if we put obligations on the auditor to ensure that the financial statements are free from material misstatement, and these are the words which our auditing standards use, then it is important that those people who are preparing the financial statements, and if those people are also chartered accountants, then we expect those chartered accountants in the industry to ensure that the financial statements are free from material misstatement. Because auditor is not a detective who can come in and detect what fraud has been committed or what are the areas of material misstatement. There has to be an obligation on the auditor as well as a chartered accountant who is in employment to ensure the compliance with the laws and regulations. And during the course of the audit, if a chartered accountant of a listed company comes across non-compliance with laws and regulations, and those laws are primarily laws relating to frauds, corruption, bribery, money laundering, terrorist financing, proceeds of crimes, or securities laws, insider tradings, so many stringent laws and regulations which are issued by SEBI. So it is a duty of the auditor as well as employee of that listed company to ensure compliance with those laws and regulations. Now, generally, all of us are ensuring compliance with laws and regulations. If there is a non-compliance, then in accordance with the applicable auditing standards, we make a disclosure of that in our audit report. In certain cases, we are required to inform the relevant government and regulatory bodies. For example, under section 143 subsection 12, there is a requirement of reporting on frauds. So if there is a fraud which has taken place or fraud which is in the process of happening, there is an obligation on an auditor to report it to the central government. Similarly, if frauds are happening, uh, the regulations of Reserve Bank of India require auditors of banks and non-banking financial companies also to make certain disclosures with respect to frauds if they come across those frauds during the course of audit. So the objective is not to detect frauds. The objective is that in case you come across a fraud, you need to report. And we have a guidance note which the Institute has issued in terms of section 143.12 reporting as to how the auditor should proceed in such cases. So similarly, in case of non-compliance with laws and regulations, and if it is during the course of audit of a listed company, if it involves any non-compliance with these laws. So we are not talking about all laws which are applicable to the company. There could be laws with respect to pollution controls. There could be laws which are say applicable in case of pharmaceutical companies with respect to standards which should be followed. Now these are technical matters. These are not matters where you and I as auditors would be competent to understand the technicalities. But the white collar crimes as they are called, if there is terrorist funding, if there is money laundering, then what is our responsibilities under those laws? We need to be clear and very conscious of our obligations even during the normal course of audit. Even today, if I am auditing before 1st of July, I have an obligation under the respective laws that if those laws are not being complied, and as a result of that, there is going to be a material misstatement in the financial statements, I need to report that. So further extending this concept, this has come in the form of NOCLAR, non-compliance with laws and regulations. But the important point is this non-compliance is now also equally applicable to a member in service. So those, my friends who are working in industries, kindly look into this. This is going to be a major impact for our members in industry, in the sense that if there is a situation of non-compliance with these laws, you need to see what is your legal responsibilities, and in addition to that, you also need to see what is the ethical requirement, and you are required to ensure compliance with this NOCLAR provisions effective from 1st of July 2020. The suggested reporting under NOCLAR as of today is that since it is in relation to public interest entities and particularly listed companies, therefore the reporting is required to be made to SEBI. Now, before you report to SEBI of a NOCLAR, you have to be very careful in terms of having proper evidence and see that it doesn't land us as professional accountants, as chartered accountants into more litigations with the company, and at the same time to ensure and to strike a proper balance and see that our ethical requirements are also complied with. So this is one major change which is coming in from 1st of July. This is to uphold the highest ethical principles, and it is applicable to a limited number of members. Majority of us are not auditors for listed companies, and therefore this is not going to be applicable to auditors of unlisted companies. But where it is applicable, I think our responsibilities have increased, and we need to be more careful about these provisions as and when they become applicable. So the ethical standards also say that matters inconsequential are not within the scope. So materiality, important matters. Non-compliance other than by client or employer or those charged with other working for or under the directions of the employer. And professional accountants as auditors only when and if he encounters this while providing professional services. So if I'm an auditor or if I'm an employee of a listed company, and if there are non-compliances, I need to ensure compliance with this NOCLAR and report the matter suitably to SEBI. So friends, the next part of the substantive changes is the independence and assurance engagements. Now, this is more of existing practices which are structured in part 4A and 4B of the new code of ethics. 4A is independence for audit and review engagements, and part B is independence for assurance engagements other than audit and review. So most of the time we are carrying out our services of audit of financial statements or review of financial statements. So those are the matters where independence of mind is important, and they are contained in part 4A. 4B deals with situations like, say, Kaun Banega Crorepati, or some such kind of games or some such kinds of events where some numbering is done, and these are said to be a review or audit of non-financial statements. But there also the assurance is involved. If somebody is participating in, say, an event like Kaun Banega Crorepati, and is said that there were 100 people and this is the one whose finger was the fastest. So there is an element of judging which has gone, and that judgment is being validated by a different set of people. So those who are doing it are ones who are engaged in the audit or review of non-financial statements. And there also the independence requirements are applicable. And if a chartered accountant is involved in that process, then part 4B would apply, and it is necessary to ensure independence of mind. So the International Code of Ethics, even the existing Code of Ethics, you will find that there is a threat and there are safeguards to mitigate that threat. That is how the international code is structured. So if you come across a threat, what are the steps you should take to reduce that threat to an applicable, acceptable level? So assuming that there is a possibility of a conflict of view, a conflict could come in that I, as an auditor, have given an opinion to my audit client based on which certain transactions are recorded in the financial statements, and later on I audit those financial statements. So that is said to be a self-review threat, because originally I have given the opinion. Based on that opinion, again, that has been incorporated, and finally I come in as an auditor to decide whether it is right or wrong. So one cannot be the jury and the judge and also be the counsel at the same time. So these are called threats. Now, if you have to reduce these threats, what are the safeguards? So in some cases, what is suggested is that there should be different teams, there should be different professionals within the same audit firm who are rendering different services, so that the opinion of the same person is not being reviewed by the same person, but is reviewed independently by a different set of persons. That is where you can say you have safeguards to reduce threats to an acceptable level. Now, these would apply in context of larger firms where you can identifiably have different set of professionals carrying out different activities, and there those threats can be reduced to an acceptable levels. So these matters are now contained in more detailed in the independence standards. Now, this is one more aspect which was referred to by Abhayji, key audit partners. Today, what is important is when we sign the balance sheet, we sign our name, so and so, as partner of so and so firm. What is the membership number of that member? What is the firm registration number? And in addition to that, we generate a UDIN, unique document identification number, again, which has become applicable from last year, from 2019. Now, there could be number of chartered accountants, number of partners who are involved in carrying out that audit. Now, again, this is more applicable in context, as I said, of firms having 8 to 10 partners, and not necessarily for a small firm of 1 or 2 partners or 2 or 3 partners. The concept of key audit partners is that all partners who are involved in that audit, whether they are the signing partners or not, all of them are key audit partners, and each of them has to follow certain ethical requirements. So it is not just one whose name is appearing on the balance sheet as the signing partner, but who has all those chartered accountants, whether designated as partners or not, who are actively involved in that audit, will be referred to as key audit partners, and all key audit partners will be required to comply with certain ethical requirements. Then rotation of firms. Earlier it was only rotation of partners in the 2009 Code of Ethics. As I said, from 2013, we have this concept of rotation of firms, and similarly those principles have been incorporated in the new Code of Ethics. Now in the rotation of firms and in context of rotation of partners, friends, this is what was even applicable in 2009 Code of Ethics was rotation of partners. Now this is a rotation of firms. So not only the partner changes, but even the firm will have to change in terms of provisions of the Companies Act 2013. But if you look at Companies Act 2013, 139(2), as you are aware, a partnership firm, if it is an auditor, it can be appointed for a period of two terms of 5 years each. So a firm can be appointed as auditor for a total period of 10 years. And if it is a proprietary firm, then it can be appointed for a period of 5 years. Now, under this Code of Ethics, what is silent in the law is that the first term of 5 years, say partner A was the signing partner, and in the second term, partner B is the signing partner. But partner A in the second term has to go in a cooling period. And cooling period would mean that you should not be involved in that audit. So these are new principles for those of us who are auditing, say, companies under the Companies Act, where 139(2) is applicable, provisions of 139(2) and rotation of firms are applicable. So it is not important that only the partner changes in the second term, but the first partner cannot be involved in any of the audit matters in the second term. And that comes in through this concept of cooling periods. This is very important. This becomes effective from 1st of July 2020, and therefore all auditors of listed companies should ensure that as of today, the first period of 5 years would be in progress. Those who have been appointed in 2017. So for them, this would actually become applicable after 2022, when the second term of 5 years would start. But in some cases, where the earlier period is also has been considered, and the first period of 5 years is over, and it is now the second period of 5 years which is in progress, please ensure that the signing partner of the first 5 years is not involved in the audit in the second 5 years. He may not be the signing partner today, but he should also not be involved in the audit of that entity in the second period, because this concept of cooling in has come in, and for the engagement partner, it is 5 years cooling. So for the entire period of the next 5 years, the first partner will not be involved in the audit of the second part in the second term. So the concept which is brought in under section 139 of the Companies Act, and some principles which are not there in the law, are now being strengthened by way of the ethical requirements. And friends, it is important as a profession that we adhere to ethical requirements even before they become part of the law. If you ask me, ethics is even above the law, and therefore this is a classic example where it is though not part of the Companies Act, but by virtue of Code of Ethics, suo moto the institute is bringing in restrictions on the first engagement partner when he in the second period of 5 years, that he should be completely in cooling off and he should not be involved in the audit. Now, for small firms with say 2 or 3 partners, this could be a challenge, because if I'm say a 2 partners firm and first term I was the signing partner, my second partner may not be involved in the audit actually, and he may be involved in say taxation matters, as is generally happening. And therefore what is happening is the first partner conducts the audit in the second term, but the taxation partner comes and signs the audit report. Now, in terms of the ethical requirements, the first engagement partner cannot be involved in the second period. And friends, particularly for the audits of listed companies, we have this National Financial Reporting Authority which has come in. They have recently issued the draft rules for giving the documents to NFRA as and when they are called. They have set out certain protocols. Till date, our institute had said that there should be sufficient reliable audit evidence. But how that sufficient reliable audit evidence is required to be kept in our files is left to the audit firms to decide. Now, NFRA has prescribed the detailed guidelines. And as you know, those of our friends who are signing listed
Your network bandwidth is low, है ना?
My friends who are signing
दूसरा alternative नहीं हो सकता है इसका.
सर दूसरा अल्टरनेटिव ये है कि
Please unmute yourself, please.
अरे या तो वो 500-600 रुपये महीने का भी जाएगा,
या तो ये देख लो या वो देख लो.
नहीं जा रहा, ये तो सारा भी यहाँ की
Some of
वजह
our
से है
friends
कि
are having a private conversation which is being heard in the public. I request them to mute their speakers.
Sir, I have muted them. Please unmute. Sir, please carry on, sir.
Okay.
Yeah, please.
Okay. So these are new concepts and we need to be careful when we are auditors of listed companies. Now, those who are proprietary concerns, for them under section 139(2), their appointment is for a period of 5 years, and there is no concept, because it's a proprietary firm, the concept of partner rotation does not apply. But in case of today, it is for audit of listed companies and companies which are prescribed under the Companies Act. But friends, these are new concepts which would be applicable even in case of public interest entities, and in future more and more types of regulators may like such kind of ethical requirements to be taken up by the auditing firms. This is today a starting point and we should look at it very clearly. Then friends, under section 144 of the Companies Act prescribes certain services which cannot be rendered by chartered accountants, by the auditors, either directly, indirectly, or through associate, subsidiaries. So many words are used in 144. Now, what are the services if you look at in 144 is say bookkeeping, auditing, designing internal controls. So these are services which are not to be taken up by the auditors. Now, there's one service which is mentioned as a management service, and that is where there has been a lot of debate as to what is management service. If I am filing the income tax return of my audit client, now preparation and filing of the income tax return is the duty of the management, is the duty of my audit client, of the company. If I am preparing and filing his income tax return, am I rendering a management service to that client which is prohibited under section 144? If I am filing the company law returns, I am filing the GST returns, along with carrying out the audit of a private limited company. Because friends, section 144 applies to all companies. It is not applicable only to listed companies. So even in context of a private limited company, a small company, a one-man company, I cannot do project reports for that company if I'm the auditor, if I read section 144, because they are the services which are not permitted. Under section 2 of the Chartered Accountants Act, and friends, we read so many acts, we are so well experts in all laws. We have friends here who are expert in Companies Act, in expert in GST, in income tax, in FEMA. But there's a very small act which rarely we read, and that is the Chartered Accountants Act. Section 2 of Chartered Accountant says a member in public practice can carry out certain functions, and they are prescribed under Section 2. That is where we derive the power to carry out our professional practice. Section 2 of the 2 of the Chartered Accountants Act. And it says such other services as may be permitted by the council from time to time. Now, in terms of that power which is given by the act to the council of the institute has prescribed certain management consultancy services. And all of us know what are the management consultancy services which we can render. Now, look at the dilemma. Management consultancy services are permitted to be rendered by a chartered accountant, but Companies Act says management services cannot be rendered. There the word uses management consultancy services. International Code of Ethics is here using the word management responsibilities. Now this is where I think we should have more introspection, more deliberations, and try and understand how these words are important to us. So whatever is management services under the Companies Act is not permitted because of section 144, and what is management service is not defined anywhere. Now our code of ethics is using the international terminology management responsibilities. I had a personal view, and all of us can have different views. We are entitled to have our views, but finally we bow before what is the view of the council. I was hoping we had used the word management services here because that brings in more closer to our Companies Act. But be that as may, this is one important difference with which we will have to live with. What is a management responsibility is very well defined in the International Code of Ethics, and we will go through this and understand what is management responsibilities. In terms of Companies Act, we can borrow these literature in understanding what could be a management service which is prohibited under the Companies Act. Largely, I would say what is a management responsibility and management service would not be far different. Somebody can put this into different and say this is management responsibility which is prohibited, this is not a management service, and can argue differently. But what is a management responsibility? The Code of Ethics says that whatever is the management supposed to do, you cannot undertake that responsibility. So examples of management services, management responsibilities are preparing, and these are more of exceptions which are not coming with management responsibilities. Will be planning, designing, implementing all strategic functions, controls which are not permitted to any of us. But filing administrative forms where we don't take up the responsibility. So filing an income tax return or a GST return is not undertaking management responsibilities. Today, it is also understood that it is not a management service which is prohibited in 144, because in the income tax return, GST return, the verification is done. The managing director who signs the income tax return undertakes the entire responsibilities, and if anything is found to be wrong, he will be penalized and under the provisions of the Income Tax Act. So I am only assisting him in preparing his return. Responsibility remains with him. And if I am performing such administrative services, then they are not management responsibilities. They are not management services. But can I be involved in recruitment of an employee? And suppose a company is recruiting, say, a general manager finance. Can the auditor of that company be involved? Say the director may say that you are with me for last so many years, and this is how practically it happens कि साहब आप और मैं इतने वर्षों से एक दूसरे को जानते हैं, आप मेरे बिजनेस को जानते हैं, मैं कोई जीएम फाइनेंस अपॉइंट कर रहा हूँ, आप भी इंटरव्यू में बैठिए और देख लीजिए ये मेरे कंपनी के लिए सूटेबल है कि नहीं. Now this is a very common practice. But friends, when we participate in that, then we are being hit by the provisions of management responsibilities and also hit by management services, the word which is used in the Companies Act. So participating in recruitment services is completely prohibited. But administrative services like filing of returns, filing of such forms is not considered as undertaking any responsibilities, and therefore it is not prohibited. So this concept of management responsibilities is something new in the International Code of Ethics, which is becoming applicable. It is not far different from what we are doing, and therefore I believe even now complying with this effective 1st of July 2020 should not be a problem for all of us. So non-assurance services under section 144 and what is there under this are more or less aligned, and what is prohibited under 144 is also what is regarded as non-assurance services, which the new code of ethics does not permit. There is more guidance available here in this code of ethics in volume 1 with respect to what are the non-assurance services, and I would encourage members to go through, because all this are now available on the website. Volume 1, volume 2 is also now available, and one can refer to them to understand in more details. Now friends, come to the taxation service to the audit clients. This is very important. And this is where some of us could have an issue. We have very good guidance in the form of guidance note on tax audit. We have our standards on auditing where those conflicts are proposed to be avoided. Certain services which are rendered to the tax clients, and if they are also the audit clients, then there is a restriction which will come in effective 1st of July. So normally, as I said earlier, preparing an income tax return will normally not create any threats and would be permitted to be carried out. As we say, the financial statements are prepared by the management. They are audited by the auditors. Auditors are not the preparers of the financial statements. So even tax provisions, even if we are tax consultants to the audit companies, audit clients, we help them in quantifying their tax liability based on the information provided by them. Does not mean that we are substituting their judgment in terms of quantifying the tax liabilities. Because as I said earlier, if I take a view and I am supposed to be the auditing that same view, there will be a self-review threat. So quantification of tax liability, as an auditor, I can help my client in estimating, but I don't take up that responsibility of finding out this is the tax liability, because there are, say, certain disallowances, personal expenses to the extent not allowable under section 37, or the date on which the assets are put to use for purpose of calculating depreciation on section 32, which the management has to come and tell us. And based on that, we would be quantifying. So those services are permitted. But imagine and take for instance, if the client is in the process of restructuring its business. Now, in such a situation, if I am an auditor, I should not get involved in creating tax structures, as they are called. Because as an auditor, if I am involved in carrying out tax planning to that extent, then there would be a very serious conflict of interests which can arise. And therefore, normal professional practice is permitted. Tax planning within the normal laws is permitted. But what is an aggressive tax planning? Where there is business restructuring being carried out, where certain matters are being worked out in such a manner that there is a tax optimization which may not be completely within the legal framework. Certainly, as an auditor, we should not participate. So, through the code of ethics, some of the existing otherwise accepted practices are being brought in as mandatory best practices for all of us. So, while normal tax services we can render, we can appear on behalf of the client before the assessing officer, before commissioner appeals, before income tax appellate authorities, before other authorities under the Income Tax Act, that is permitted. But excessive tax planning, we should be very careful, and in case of audit client, stay away from them, because there could be something we could enter into areas which could be not permitted. So friends, our ethics are also principle based. These are not rule based. So you will not know this is permitted and this is prohibited. These are best principles which have to be interpreted, and accordingly it needs to be carried out. So our friend Srinivas Agrawal sahab has raised his hand. Can you please unmute Srinivas ji? I think he is wanting to say something. Pradeep ji, somebody, Mr. Friend Srinivas Agrawal sahab has raised his hand. Can you please unmute him? Or we go ahead. Abhay ji, what do you say? Pradeep ji, can I continue?
Sir, please continue.
Sir, you can continue, sir.
Okay. So
Please continue.
I would request our friends, please put in your Q&A, and I will stop in next 10-15 minutes and we'll discuss practical issues in more detail. But on taxation services, one important matter, this is because something very practical to all of us. I just want to clarify. There are situations as tax auditors, we are auditors and tax consultants, and this could be true for many of us. Many of us, for our audit clients, we are also handling their taxation matters, mostly income tax. Many of us may also be handling income tax and GST. Now, in context of income tax, I'm saying because we have a guidance note on tax audit, and which brings out this principle very well. Now, supposing my client has taken a deduction which is debatable. What is my responsibility as an auditor and what is my responsibility as a tax consultant? We should be very clear about that. Take, for example, a situation, and I'm giving a very practical situation where my client has deducted the provident fund of the employees and has failed to deposit that within the due date prescribed under the PF Act, but has deposited it before the due date of filing of the income tax return. Now, today, this is a very debatable issue. Income Tax Appellate Tribunal, which has a jurisdiction over Indore and Bhopal. The Honorable ITAT Indore has in a decision stated that if the provident fund deducted is deposited before the due date of filing of the income tax return, it is still allowable as a deduction under section 43B. The Honorable ITAT Indore has followed the decision of Rajasthan High Court, because there is no decision of Honorable Madhya Pradesh High Court. they have followed the decision of Honorable Rajasthan High Court. Honorable Gujarat High Court has recently reversed one of its earlier decisions, and Gujarat High Court has said that it is not allowable as a deduction. Karnataka High Court has also recently said it is not allowed as a deduction. And friends, many of you would have observed the CPC is today making additions on these matters, and the matter is then referred to the assessing officer. What is my responsibility as a tax auditor? That is what is a matter of concern, because I must also ensure compliance with Code of Ethics. Now, my view, personal view is, and this flows from what is given in our guidance note. So applying the principles of guidance note in this case, if my client is from Indore or Bhopal and who is governed by the Income Tax Appellate Tribunal Indore, where there is no decision of the Madhya Pradesh High Court as of now, I should give an emphasis of matter. If my client is in Rajasthan, where there is a decision of the Honorable High Court of Rajasthan, where there is a decision in favor of the assessee, not even an emphasis of matter is required, because that is the law which applies to an assessee in the state of Rajasthan. If my client is in Gujarat, where the law of Gujarat says that because it is a decision of Gujarat High Court, or my client is in Karnataka, where Karnataka High Court is against the assessee and in favor of the revenue. If my client wants to litigate, then I should qualify the financial statements. So friends, same issue, but law is differently being implemented in different states. So Madhya Pradesh, I suggest we give an emphasis of matter, bring it to the notice of the assessing officer. We are not qualifying it because there is a decision of the tribunal which is binding on the assessing officer, but we are drawing his attention to this matter. Rajasthan, I did not even qualify because the Honorable High Court has given a decision, binding decision, which is the law in that state. But in Karnataka or in Gujarat, I need to qualify. Qualify because the Honorable High Court has taken a decision against the assessee. Now, having qualified for an assessee in Gujarat or in Karnataka does not restrict that assessee from fighting out that case. So as a tax auditor, I should qualify, but while preparing the computation of income, if the assessee wants to contest on that issue, suitably it can be still claimed as a deduction, and then it is for the tax proceedings to take place. There is a very fine old decision in case of Rajkot Engineering Association, where the Union of India has given an affidavit that the view of the tax auditor is not binding on the assessee. And therefore, as tax auditor, I should discharge my duties as required by the auditing standards. And then as a tax consultant, I am free to litigate on behalf of the assessee in accordance with the principles of law. So we need to strike a golden balance between our role as an auditor and our role as a tax consultant. And friends, this is important not only for listed companies. This is important even in case of all private companies. This is also important in case of non-corporate entities. So those audits, while we ensure compliance with ethical standards and the auditing standards, we need to understand our roles and responsibilities accordingly. And again, this provision, once it becomes applicable from 1st of July, does not change anything substantively as to what we have been practicing and what we are supposed to be doing even today. Then friends, some very important definitions which have been brought in. What is a close family? What is an immediate family under the new Code of Ethics? Essentially, it is the spouse and and all dependents on that person who come within the definition of immediate family and a close family. And these are important because if you look at even the terms of Companies Act section 141, where if a relative is having shares or relatives in debt to a company, there are already existing provisions which say that to what extent that holding should be there, which could decide whether a person can accept or not accept an audit. Then friends, this concept of public interest entity is also brought in the code of ethics. What is a public interest entity is not defined. It is for the regulators to define. Generally, all listed companies, banks, insurance, cooperative banks, they are considered as public interest entities. And in relation to audit of those companies, certain guidelines need to be followed. I would skip some of these slides. Of course, they would be available with the chairman of the branch and he can circulate that to all the members. I would come to some other aspects like this one, which is today a bit of controversy is there. And I expect this would be settled by 30th of June. So on 1st of July, this could be applicable. What it says is, the new provision says that if your audit fees is more than 15% from of your total fees from one client, then you need to disclose that to those charged with governance and say what kind of safeguards you would have in terms of carrying out that audit assignment. Friends, the background for this is that, and this does not apply for the first 2 years, and also that this does not apply where the fees is below 5 lakhs of rupees. Now we may say 5 lakhs of rupees should have been 25 lakhs or 10 lakhs of rupees or some X amount. As of now, what the council has decided is 5 lakhs of rupees. So the provision becomes applicable from 1st of July 2020. But if it is applicable for 2 consecutive years, then the provisions of this clause would become applicable. And some relief I expect council is considering today. Let us wait and see how it comes in. Many members I have read in the social media have reacted saying that this would be detrimental to small and medium auditors and smaller firms. So let us understand this, that it does not really become applicable from 1st of July. There is a period of 2 years. If for 2 consecutive years this situation arises, then it becomes applicable. And again, our council is considering certain relaxations, so to say, in this regard. But the concept is, if supposing my total fees is 10 lakhs of rupees in a year, I get one client which is say 50,000 rupees, he is going to pay me my fees. So 50,000 in context of my total fees of 10 lakhs of rupees will not really create any pressure on any one of us that I am worried whether this client remains with me or he doesn't remain with me. My total fees is sufficient. My all other clients are there. Somebody is creating too much of difficulties for me, I can ask him to go. But just for our understanding, if my fees today is 10 lakhs of rupees and some client comes in who is going to pay me say 25 lakhs of rupees. Now for all other services, there is no public interest involved. But if I'm his auditor, a third person may raise a question कि साहब आपकी टोटल फीस तो 10 लाख रुपए है, इस आदमी से आप 25 लाख रुपए लेने जा रहे हैं, तो आप इसकी हर बात मान लोगे, आपका इंडिपेंडेंस कहाँ रहा? So that has been the basis for bringing in restrictions on how much fees should be charged from one person in context of total fees. Now, today we have a self-regulation. That self-regulation says if my fees is exceeding 40% of my total fees, then I am not, then that self-regulation says that I should not continue with that client. Now that 40% is being reduced to 15%. लेकिन पहला प्रोविजन यह था कि 40% से ज्यादा हो तो आप उस क्लाइंट को रख ही नहीं सकते हो. The new provision is, if it is exceeding 15%, then you are supposed to talk to those charged with governance, which is generally the audit committee, and who are otherwise independent directors in that audit committee, and make out your case as to, even though you are charging a higher fees from one client, you will still remain independent of the management and carry out the audit properly. So in a way, this new provision has reduced the rigors which were there earlier, but 40% has become 15%, and therefore that is what may create problems in some cases. I understand from our council member Kemishaji that council is considering to increase 15% to 30% is what the Ethical Standards Board has proposed. Final decision the Honorable Council has to take. We wait for their decision. But whatever is the ultimate decision, I am sure it is not applicable from today. It will be applicable after a period of 2 years, and we need not be unduly worried. I am sure some good solutions will come out. But this is one important change which is coming in the new code of ethics. Then friends, there are other matters which I would leave it as Abhay mentioned. We can have some FAQs at the end and some questions which members want to raise. We will take up that. But one matter with respect to contingent fees, which I would like to highlight. Normally, in an audit client, we don't charge fees on percentage basis. Clause 10 of part 1 of first schedule in a way says that fees based on a contingency should not be charged unless it has been approved by way of regulations by the council. And friends, this regulation 192 is important. Regulation 192 brings out those areas where percentage based fees can be charged. So if it is matters like term loan syndications, it is giving some management advice to a client, and based on what benefit that management gets, and as a percentage of that some fees is to be charged, then in those areas subject to the specific provisions of regulation 192, one can charge fees on a contingency basis. But in case of audits, we cannot say if your profit is 1 crore of rupees, I'll charge 10%. If your profit is 5 crores of rupees, I can charge so much percentage. So that is what is not permitted. But for other services, please see regulation 192, and those areas one can charge consultancy fees, not audit fees, based on outcome or based on a contingency of an event. Then friends, volume 2 is the existing volume, Chartered Accountants Act, Rules and Chartered Accountants Act and Regulations, Schedule 1 and Schedule 2, those provisions which are contained here. The new volume 2, all paragraphs have been numbered. There are suitable titles and subtitles which have been given, and all code of all disciplinary cases have been clubbed into volume 3 and has been brought out separately. So reading of the new code of ethics will be easier, and once we can read it easily, I'm sure the implementation will be better and more appropriate.
Yeah. Friends, I think Manoj sir have some technical glitches. I would, in the meantime, I would request C. Abhay Chhajed ji to please join, share, unmute, and please come to the screen and share about his FAQs. Please, sir, unmute yourself, sir. Sir, in the meantime, when we can have a connection with CA Manoj Fadnis, sir, uh, I would request our speaker, CA Abhay Chhajed ji, to discuss certain frequently asked questions about the topics. Yes, sir.
Yeah, I'll just do it right away.
Sir, you are unmuted, sir. Please, sir.
Thank you very much, Pradeep. But I think so what some power cut or some issue with respect to probably Fadnis ji. Should we wait, or you want me to share? Pradeep, can you allow me to share the?
Yeah, I would request in the meantime, sir, about the topic. Sir,
Okay.
yes, definitely, definitely.
I have certain FAQs on code of ethics, Pradeep. If you could allow me to share the screen.
Yes, sir. So just a minute, sir. Just a minute.
Yeah. Meanwhile, I'll request the members if they have any issues, maybe they can send it over the chat.
Now you can share. Yes.
All right. So thank you.
Yes.
Can you see the screen, Pradeep?
Yes, sir. We can see. Please, sir.
Okay. So we do not have Fadnis ji joining as of, or he's still not joined.
Sir, we are trying to coordinate with him. In the
All right.
meantime, you can please. Yeah.
Okay, I'll take certain questions with respect to the first schedule and second schedule of Code of Ethics. And if yeah, so if there's still any hello, yeah. So I would just take up few 8-10 questions which may be relevant. For members to understand, these are of course ethics.
Please share your screen, sir. Abhay, sir.
Yeah,
Yes.
I've done.
Yeah. Please, sir.
Yeah.
Please.
Yeah. So I was mentioning that since we have the new
It has been
revised
shared.
code,
You can. Yeah.
yeah. So I was I was mentioning about the revised Code of Ethics 2019 would now have this 7th April 2016 circular, which was not there in the earlier code. So now the question here is, can a practicing chartered accountant solicit clients or professional work by advertisement or respond to tenders? The answer is no. Clause 6 of Part 1 of Schedule to the Act prohibits a practicing chartered accountant from soliciting clients or professional either directly or indirectly through advertisement, circulars, personal communications. However, we should refer to the 7th April 2016, which is respond to tenders or inquiries which are issued exclusively for chartered accountant, and where minimum fees for audit and attestation services are mentioned, there the members are allowed to respond to tenders. So kindly have this 7th April 2016 circular, which clearly talks about exclusively for CAs. It is for audit and attestation services, where minimum fees is mentioned. Practicing members can respond to this tender. But where it is open for even other chartered accountants, other than chartered accountants for other professionals, then also we can respond to the tenders. But if it is other than audit and attestation services, then the minimum fees criteria is not required. So you have to keep it in mind, responding to tenders with minimum fees in case of audit and attestation services. Second is whether communication with the previous auditor is permissible via email. This is a very common issues with a lot of members would need clarification. I think Fadnis ji has joined. So Pradeep ji, should we ask him, should we admit and ask him to finish his part and then we can take up these FAQs? Hello, Pradeep. Hello. Pradeep, can you hear?
Yes, sir. Yes, sir.
So should we admit Fadnis ji first and ask him to complete his part and then we can take
Yes,
up
sir.
the
Yes.
FAQ?
Yes, sir.
All
Yes,
right.
sir. Just give me a time. Yeah.
All
Within
right.
1 minute, sir. I'm just.
Pradeep, you need to admit.
Sir, we are doing, sir. Sir, we have admitted. Manoj sir, welcome again,
Got
sir.
disconnected. I have rejoined. So, Abhay, I'm sure you would have taken up some FAQs in the meantime. Go
Of
ahead.
course, I started with a couple of them.
Yeah, please go ahead.
So I think you can finish your part, sir, and then I'll take up the FAQ. Sir, can't hear you. You need to unmute. Yeah. Yeah.
I had finished volume 1.
All
Volume
right.
2, anything you want to continue, please go ahead. Then I'll come in and any questions
Okay,
are there, we can also take that.
Maybe what you can do is when I'm taking the FAQ, you
Yes,
can add
please.
on to those FAQs if there's anything which is
Sure.
important for members to know. Yeah. Okay. All
Sure,
right.
sure. Please go
Okay.
ahead.
Yeah. So this first, Manoj, for you, I've already shared this responding to tenders.
Yeah, please go ahead.
Yeah, so circular dated 7th April 2016. Yeah. So second issue is with respect to the communication with the previous auditor. Now, volume 2 also have this amendment, and this was very important because earlier wide email was not included in the code of ethics. Now, in the revised code of ethics, there has been specifically, as per the council guidelines, has been specifically mentioned the communication with the previous auditor is permissible. And what is important in the revised code of ethics is that the communication has to be
ये तुम ले लो ना, ये वाला लैपटॉप के पास है? अच्छा
there is Pradeep, there is disturbance. Can you unmute, Pradeep?
Yes, sir. Sir.
Yeah. So I was saying the communication with the previous auditor by a letter sent, registered acknowledgement, by hand against a written acknowledgement. Now, acknowledgement of the communication from retiring auditor via email address registered with the institute or last known official email ID. So now this has also been added in the revised code of ethics. The communication via email. So we would certainly like the members in practice that if any such communication from previous auditor is received, should be responded as no objection over mail. This would be also considered by the council as an official communication. And another thing which is important here is the UDIN, the unique identification number to be generated on UDIN portal. Now, this is still not being clarified by the council and in the revised code of ethics, because this is subject to separate guidelines. Now, we'll have guidelines which will be issued by the council before 30th of June in this regard, whether this communication with the previous auditor would require UDIN or not, so, but has been included under the revised code of ethics. So this is for, a very important part which has been included while communication with the previous auditors. Now, during the bank audit, we have a lot of such doubts whether UDIN to be generated separately for LFAR, for tax audit, for statutory audits. It has been very specifically been cleared under the FAQ of UDIN that no UDIN has to be generated for assignment, where it is bank audit, including LFAR and certificate. However, where we have separate assignment in case of tax audit, a separate UDIN has to be generated. Now, this is also again, UDIN will be generated for both manually as well as digitally signed reports. Now, most of the banks now started accepting or using digitally signed reports. So UDIN has to be generated wherever manual is applicable. If not, then digitally signed reports, UDIN has to be generated and to be issued to the authorities or those charged with the governance. Now, is it mandatory to mention UDIN on financial statements over and above on audit reports? Now, this is very important because even Manoj mentioned in his coverage in his deliberation that the financial statements are responsibilities of the management. So we need not to mention UDIN in the financial statement. It is to be mentioned on the audit report. I think I would request Manoj here to maybe, he can clarify more if the member in practice mention UDIN on the financial statement, whether that would be against the council guidelines, because there is no such clarification which is there. So for us as a member, when we are certifying the financial statement, when we issue the audit report, UDIN has to be mentioned on the audit report and not on the financial statement.
So very interesting issue, Abhayji.
Yes.
As I see today, the practices are both even on the financial statements. Some
Correct.
auditors are putting it
Yes.
below the signature of the engagement partner. And I think
Correct.
if it is at that particular place before the below the signature of the partner, it should not be a problem, and a member can put the UDIN there. However, in case of listed companies, another issue which arises is because the some information is required to be given on the UDIN portal, which is before a UDIN is generated. And these are price sensitive information. So in case of some of the listed companies where there are sharp movements on the prices of the companies, share prices, I have also seen a practice where the auditors are generating the UDIN after signing the financial statements, because that is, the institute permits today a period of 15 days.
Correct.
So the UDIN is generated after the financial statements have been signed, and also after the financial results have been sent to the stock exchanges. After that, the UDIN is generated. So those practices are also prevalent, and I think that would still be in compliance with what is the institute's requirements.
All right. Okay. So like we all know that if we have not able to generate UDIN on the date of signing of the audit report certificates, then we can generate it within 15 days from the signing and can be communicated to those charged with the governance or to the management. And of course, if not generating UDIN would lead to non-adherence to council guidelines and may attract disciplinary proceedings. Another issue is with respect to a chartered accountant in practice share his fees with government in respect of the government audits. Now, this was an issue with even the institute came across that in case of certain circulars orders which are issued by registrar of various state cooperative societies, wherein it has been mentioned that certain amount of audit fees is payable to concerned state government. Like we know, where in case of these society audits in state of Madhya Pradesh or the district, where we do the district cooperative, central cooperative banks, where there is certain amount of fees which is shared by these state cooperative societies. So based on this, the council was of the view that this is allowed and percentage of fees can be deposited and would not be a non-compliance. So this was also accepted by the council, and a certain percentage in specific cases, like we have registrar of various societies where they charge certain percentage on our fees, like total fees, they take 10% and we keep 90%. So that is, we are kind of sharing our part of fees to the registrar of cooperative societies, so which was accepted. And this was due to various administratives and other expenses which are incurred by these societies. Then whether a joint auditor will be responsible for work done by another auditor. Now, again, this was uh, taken up in clause 2 of part 1 of second schedule. Now, joint auditors would be equally responsible for the work which is allotted to him, whether or not he has prepared a separate report on the work performed by him. So however, on the other hand, all joint auditors are jointly and severally responsible for work which is not divided among the joint auditors. So each one would be responsible for, like we know our standards on auditing 299, which clearly talks about the responsibilities of joint auditors. So wherever, we have not performed based on the work allotted to us, clause 2 of part 1 of second schedule uh, leads to a professional misconduct under the code of ethics. Wherever the work is not divided among the auditors jointly or severally, then each one of us would be responsible, as we are the joint auditors. Can I once again? Can a chartered accountant receive his professional fees in advance, partly or in full? It has been very made clear as per the CA regulation and as well as with the code of ethics that there is no restriction or bar on receiving fees in advance. So this was also one of the FAQs which was there. Samang, in fact, I have shared an FAQ on ethical issues to the branch committee. So I would request you to kindly circulate among all the members, all the participants, so that they would get the list of FAQs of the ICAI and the council guidelines based on various questions which was raised by the members. I think that will be very useful for members, to understand the code of ethics in more detail and in depth.
Yes, sir, it would be done, sir. It would
Yeah,
be done, sir.
I've shared
Yes, sir.
over mail.
Yeah. Yes,
So
sir.
another issue which is generally members have doubts is whether the audits conducted under section 44AD and 44AE of the Income Tax Act shall be taken into account for the purpose of reckoning the specified number of audits. We all know that 60 is the limit under 44AB tax audit, which is allowed. Over and above, it contravenes the council guidelines. So 44 AD and AE are not part of 44 AB audit. So these have to be excluded while taking the limit of 60 for the purpose of tax audit. So specified number of tax audit assignments. Then whether a member in practice will be liable if he fails to report a material misstatement known to him to appear. Yes. Also, in one of the deliberation, Fadnis ji mentioned that where the material misstatement has occurred and it has not been uh, put it in the audit report, or member in practice or the auditor has not mentioned in his audit report, then he would be guilty of professional misconduct under clause 6 of part 1 of second schedule if he fails to report material misstatement known to him to appear in the financial statements. Then a question also arises, can a member act as a tax auditor and internal auditor of an entity? It has been clearly said that no, council has decided that internal auditor of a entity, he cannot be the tax auditor. So this has been made clear in the FAQ also and in the council guidelines that an internal auditor cannot be a tax auditor of the same entity. Now, this is another just I thought could share with the members is, can the goodwill of a proprietary firm of chartered accountant after his death be sold, transferred to another eligible member? Council has said that yes, that the issue whether the goodwill can be sold, transferred to another eligible member after the death, and came to the view that the same is permissible. So these were certain FAQs I thought I could share with the members. Manoj, I think you can add on to certain more issues if there are, if you have some more, practical issues which you could share with your experience, or we can ask the members to raise any query or any issues which they have in the presentation. Thank you very much.
Thank you, Abhay, sir. Sir,
Thank you,
Manoj, sir.
Abhijit. There is one question which I see in the Q&A, whether a security deposit or earnest money deposit can be paid along with the tender. So the general guidance is yes, it should be a reasonable amount. If it is unreasonable, the Institute's Ethical Standards Board can can intervene. But normally anything of 2,000, 5,000, 10,000 rupees would normally be a reasonable amount depending upon the type of the assignment, and that can be paid along with the tenders. The FAQs which were dealt with by Abhayji are very practical and relevant from the day-to-day professional practice for all of us, like communication with the previous auditor, something important, applicable even in case of bank audits, for the reason that it is part of the law. And even if the audit is allotted to us by a process which is through the Reserve Bank of India and the Institute, so on and so forth, that does not negate or that does not override the requirement of the law. And therefore, these are important matters which should be borne in mind. Many a times with our anxiety to help the client at the last moment, we fail to ensure compliance with this, and there could be a problem. Similarly, with respect to these matters, our auditing standards are equally important. Friends, one practical aspect is that Form 3CB, which gives a place for giving comments, observations, qualifications, etc., that column should be suitably used, and certain general disclaimers should be given there. For instance, if the inventory has not been physically verified by us, we should give a comment there that we could not verify the physical inventory. Although the standards require us to carry out other alternative procedures to substantiate the existence and the valuation of the inventory if physical verification could not be done. These are more important in context of the COVID environment, where 31st of March inventory could not have been taken. Nevertheless, we need to ensure compliance with the standards on auditing. And in case of non-corporate entities, retailers, traders, this is very important, because if there is a declaration by the, if there is a survey and the SSE declares something like excess inventory, then there are problems which the tax auditors can face. So those columns in context of tax audits form 3CB are very relevant and should be properly utilized. If there are any other queries, which are, I don't see any more on Q&A, but if there are queries, Abhay is available, I am also available, and my presentation will be shared with the branch management, which could then be available to all the participants. Thank you very much.
Sir, our members have certain queries. CA Amrish Shukla has raised a question. Is partnership with other professional allowed?
So as of now, it is not permitted. The law has been amended. Chartered Accountants Act has been amended. CS Act has been amended, and Cost Accountants Act has been amended, which permits partnership with other professionals. However, the ground reality is that the relevant regulations and the relevant forms have not been notified. So practically, it is not possible as of today.
Thank you, sir. Sir, another query is of CA Manoj Agrawal ji. He is asking, is cooling off of the EP applicable for listed entities only? And is TP study a management responsibility?
So the first question is cooling of the engagement partner. So today, the rotation of audits as is being practiced is under section 139. In case of bank audits, the firm is rotated and there is no rotation of partners. The firm itself gets rotated. The bank audits could be for a period of 3 years or 4 years. And in that time period, there could be one partner who can be the engagement partner. But take the case of section 139, where of the Companies Act, where there is a rotation of partners in a period of 10 years. So the firm can be appointed for a period of 5 years and again for another period of 5 years. Now, in the second period of 5 years, the engagement partner has to change. During that period, this engagement partner will have to comply with the cooling requirements as given in the new code of ethics. So this would apply to companies to which the provisions of section 139 apply. Today it applies to listed companies and private limited companies, I think above 50 crores of rupees, and public limited companies above 20 crores of rupees. So certain threshold limits have been provided for unlisted private limited companies and public limited companies. There, where 139 rotation of partner applies, the cooling requirement of given in the code of ethics will become applicable from 1st of July 2020.
Sir, there is another query of CA Vinod Jain ji, that is fee
I'm
charge.
Sorry, there was second query in the last question that you asked.
Yeah, that is the query was, sir, is TP study a management responsibility?
Interesting question, because if you are the tax auditor and you are issuing an opinion based on the transfer pricing study which the company has undertaken, so it would be a management responsibility. I would put it like that, because you cannot carry out the transfer pricing study yourself and again issue an audit opinion on that study and say the documents kept are relevant and reliable. So that is where the self-review threat would be created. So the firm which does the transfer pricing study cannot be the auditor under the Income Tax Act to issue an opinion on the same.
Thank you, sir. Sir, there is one query of CA Vinod Jain ji, that is fee charge for verification of fixed assets of the various stocks or extra taxation matters attending appeal will cover 15% changing restrictions of total. That is, if we are doing stocks and dealing with taxation matters also. That is
So I understand this
pending
query
their
is
appeal.
where
Will
there is.
cover 15% of total. Yes, sir.
Are you mentioning that 15%
Yes,
requirement,
sir.
which is okay?
Yeah.
Now, if your fees from a audit client, you have to decide what is the audit fees and what is the fees for other services. Now, what is the new requirement is that, and it applies to all entities. So not just company, but even non-corporate entity. Today, the provision is that if your fees is exceeding 5 lakhs of rupees, and out of that 15% is from one client, then you need, and if that period continues for a period of 2 years, then you need to come back to the client and those charged with governance and ensure that you have safeguards in place to carry out the audit. Now, this concept, in my view, which is, as I said, is also again subject to council decision and which is expected in the month of June. In my view, this should apply only to listed companies, number one, because that is where that concept of those charged with governance is applicable. In case of private limited companies, there are no independent directors, and therefore it is just the management and the owners which are one and the same. So these provisions are likely to be modified in the incoming council meeting, and subject to that, the new provisions would become applicable. But yes, all your audit fees, you'll have to be clear what is your audit fees and what is the fees for other services. And 15% of your audit fees, your fees from that client should not exceed 15% of your total fees.
Thank you, sir. Sir, there is one another query of CHT Sharma ji. Can a CA do GST return filing work and GST audit of same client?
So when you are doing a very good query, very practical query. Now, when you are filing the income tax GST return, you are not undertaking any management responsibilities. You have to be clear that you don't take any management responsibilities. Many a times in case of government organizations, they say that you are responsible for everything. So that is not permitted. You cannot take up the responsibility of ensuring, of preparing and doing everything and issuing an audit report. But if your job is restricted to only preparation of the GST return based on the data which is provided by the client, the correctness and completeness of the data is with the client and not on you, then you can file the GST returns and you can carry out the GST audit also, as is done in case of filing of income tax returns and filing of the and carrying out the tax audit reports.
Thank you, sir. Sir, there is one another query from Sachin, Sachin Kumar Rai. He asked if a client is giving more than 15% of total fees to firm, then the firm will have to intimate to all TCWG or only to company's client. Whether
No,
it is
that is restricted only to the client where your fees is more than 15%. So if my fees is 15%, more than 15% from one particular client, then only in that client there is a possible conflict of independence. And therefore I am required to go only to that client and establish that I am independent of the management in carrying out that audit.
Sir, sir, I think most of the our queries of members are being resolved, and your PPTs and Abhay sir PPTs will be submitted to the members. I feel so. Most of the concept of code of ethics and the new changes are being deliberately being resolved among the members, and when the council further make any changes, that would be very much clarified by the council itself. I'm very thankful to both the speakers for their well content deliberation. We have with us C. Anshul Agrawal, Vice Chairman, Bhopal branch. Welcome, Anshulji. I would request
Thank you so much, sir.
C. Anshul Agrawal ji to provide his vote of thanks. Sir.
Thank you, Pradeep ji. On behalf of Bhopal branch of ICAI, I extend my sincere thanks to the very respectful, renowned and eminent speaker and the past president of ICAI, Manoj Fadnis sir, and our very own simple, dynamic and past chairman CIRC, Abhay Chhajed sir, for accepting our request and addressing webinar on revised code of ethics. It was awesome deliberation by both of you, sir, and I'm sure every participant learned a lot from that. Further, I extend my warm thanks to all participants for making this webinar grand success. Sir, there was a participation of approx 100 participants, which itself is an indicator that a huge participation was there, and this webinar is a grand success. So thank you so much again. And at last, I extend my sincere thanks to entire technical team, my managing committee colleagues, and each and every person who contributed in making the webinar success. Thank you so much, sir. Thank you.
Thank you.
Thank you. Thank you. Thank you, Anshul.
Thank you.
Sir, thank you so much.
Great pleasure to join the webinar.
Thank you, sir.
Thank
Yeah,
you, team
thank you.
Bhopal.
Okay. See you, sir. Okay.
So all stay inside and stay safe. कल से lockdown तो खुल रहा है, फिर भी let us all remain safe.
Yeah. Yes.
Definitely, sir. Definitely, sir.
Okay, sir.
Yes, yes, Pradeep ji, please. Thank you, Manoj ji.
Thank you.
Thank you very much. Thank you, Abhay ji.
Thank you. Thank you, Chairman. Okay.
Thank you.
Thanks, sir. Thank you. Bye.
Thank you.
Okay, bye.